Before I found this trading strategy, I used to have a couple $100, but since using this trading strategy, I found it to be quite profitable, and you can too. It does take some practice, but that's why you have me to show you how to become a profitable forex trader. So before we learn this trading strategy, let me quickly show you some of the results I actually got using this trading strategy, and you can too. And look at these beautiful trades over here. It just shows how powerful this trading strategy is. I tried it on a small balance, I tried it on a big one. It works both ways. So let me just show you this 5-minute forex scalping strategy. Okay, so the first thing we want to do is go inside the indicators tab and type in exponential. Under technicals, you will find moving average exponential. We will need 3 of them. Now hover your mouse to the first exponential moving average and click on this settings icon. You will have this box opened up, so I change the length from 9 to 50. We're going to do the same thing for the remaining exponential moving averages. So I click on the settings icon once again. For the second EMA line, we will change the length from 9 to 100. And the last EMA line, change the length from 9 to 200. Once you do that, click OK. You can style the EMA lines the way you want. Personally, I like my 50 line to be blue, 100 line to be red, and 200 green. You're more than welcome to copy the exact same settings. It might be even easier to understand and follow the instructions I'm about to give. Okay, finally, we are ready and set to understand this trading strategy. So we are currently on Euro USD currency pair 5-minute time frame, and we can see that the market is currently on a flag pattern dropping back down. This type of price action is usually bullish, so we should be waiting for a bullish move towards the upside. Now, we cannot enter yet because we do not have a entry confirmation. So where do we actually want to enter our trades? So let's just have a look. Let's play the candlestick slowly and find the right entry. So it actually breaks our moving averages and goes back up. Does this give you a good enough reason to enter? Let me stop it for a second. Should we enter over here? No. Just because it broke the moving averages once and going back up does not mean it's the right confirmation for us to enter. We need some sort of candlestick confirmation. So let's just see if the market will play out the way we want. Nothing interesting is happening at the moment, although we are seeing new highs forming just over here. We do not see a right entry position. And you might be thinking, well, where the hell do we enter? Well, we need a little patience, and patience wins in Forex, trust me. So waiting for that trade, we need a nice little cross of the 50 moving average. And do we get one? Yes, we do. So this is the first step for this trading strategy. After a long move towards the upside, we finally get a break of 50 moving average. This is great. However, we need some sort of rejection now because the overall trend direction is towards the upside. When the market is trending up, the exponential 200 moving average line is typically below the candlesticks, and vice versa. If it's trending down, you're going to see the exponential 200 moving average be on the very top. Once it crosses, the trend change and you change directions. So we now know that we want to be buying, but where do we buy? Well, we need to wait for a few more candlesticks, and that would be the best entry opportunity. I can guarantee it. Have a look at this. If we get a nice rejection candlestick, there we go. Look at this one over here. A nice little push towards the downside. Broke past the 50 moving averages. What did we get after? A nice bullish engulfing candlestick. Once again, breaking through the 50 moving average. This gives us a beautiful confirmation to enter the trade long. And if we want to long this position, look at this. We start off here after the bullish engulfing candlestick. Where do you think our stop loss is going to be? The stop loss has to be below the middle red line, which is the 100 exponential moving average. So if we keep our stop loss just below the 100 exponential moving average, our trade success increases dramatically. So let's take a look. I would say around 12 pips is pretty good. So let's just do that. So 1-to-1 risk to reward in this case, 12 pips stop loss, 12 pips take profit. We click OK. We have everything set up. What we can do now is draw some support and resistance areas as well as trend lines. So if we have a look at the trend line, just over here. Not the steepest trend in the world, but it makes sense to draw it, right? Because every time it touches one of these area zones, what happens? It goes towards the upside nicely, right? Every time it touches, it rejects and goes towards the upside. What's also important that we see every time it rejects the trend line, it goes higher. Rejects the trend line, it goes higher, which shows that the trend is actually very solid towards the upside. So this already gives you much more confidence that the trend is actually there to stay. Now for the resistance lines, some people would put a resistance just over here. And I would say it's fairly logical, right? We have a resistance because every time it touched one of these zones, goes down. Touches, goes down, right? So it's a solid area of resistance on the 5-minute time frame, to say the least. However, the moving support or the exponential moving averages are going to be pushing up as well with bullish force, right? So more likely than not, it's not going to bounce off this little area over here. So I believe if the market will turn around somewhere, it's gonna be this area zone over here, which is way past our take profit level, so we don't need to worry about that. We know that likely the market is gonna squeeze and likely the bullish pressure is gonna be strong and break past all the bears and go hawkish towards the upside. So let's just see what actually happens with this trading strategy. So we are going towards the upside slightly, pulling back, and that's totally okay. Let's see what happens in a few seconds. As you can see, we reached our take profit low, but where else can you enter on this trading chart if you have a look at it? If you guessed somewhere over here, that would have been a beautiful trade. Why? Well, let's remember, a nice break happened of the 50 moving average and a bullish engulfing candlestick has formed. It went towards the upside. Where else could you have entered? Well, look at this. Look at this beautiful trade over here. A massive candlestick. I'm not sure the bubbles actually give it justice, but I'll still do them since I started doing them. The beautiful bullish engulfing candlestick bounces off the 50 and 100 moving averages and shoots towards the upside nicely, where you could have potentially entered over here as well and made a profit. So just to give a quick example, let's drop that, drag it near the bullish engulfing candlestick. This is where we would enter. Stop loss much lower this time, around 8 pips would do. So 8 pips, take profit, right? So the past trade had 12 pips, this time 8 pips, so we would be 20 pips in profit. We would also take this trade over here. We would put stop loss 13 pips. Probably would have been better if I was trading it, because if you have a look just over here, in this case, the support or area sensitivity was around here. So you need to have stop loss just below that for a nice safe trade execution, and that would have been a beautiful trade as well. So 20 plus 13 pips, 33 pips profit easily made by simply watching the charts, understanding where to enter, and being patient with the right opportunities. You could have banked yourself a perfect day trading session. Also, don't forget to update your trend lines. So I haven't updated mine over here on purpose, because if we have a look just over here, the trend line makes sense again, because the wicks actually touched the previous area of sensitivity, and every time it touched, went towards the upside. What happened? It touched it again over here. Bullish pressure came in and went straight to profit, which is what we want. Please remember, a trend line is a guide. I like to follow the moving averages more than trend lines, but I draw them just to see where the market could potentially react. So I just know in my noggin that I should be a little bit more careful. Here's a quick extra tip. Don't just trade one time frame. This is the worst mistake any beginner forex trader gets. Make sure to understand every time frame. So if you trade in 5 minutes, have a look at the 15-minute time frame, maybe even the hourly time frame, to see how the structure has actually developed, because the higher time frame structure will control the lower time frames. And we can see over here on the 15-minute time frame, the 200 moving average, every single time the markets pretty much failed to break the 200 moving average, getting bullish engulfing candlesticks every single time and eventually breaking it. Look at this bullish engulfing candle, break past this area of sensitivity that we had drawn the first time, and it went towards the upside nicely, pretty much entering the big area swing zone where we could potentially turn back down because the markets move with a push exhaustion cycle. So after a push, what happens? An exhaustion happens to the previous area of sensitivity before it either goes up or loses its power and turns back down. So if you enjoyed this trading video, make sure to join our Discord group because we are totally smashing the markets. And if you want to become a profitable forex trader, there's no reason for you not to join. I highly recommend it and I can't wait to see you there. And if not, that's totally fine. You might want to watch this video next. It's a 1-minute scalping strategy I teach and it's pretty damn good.